Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host, live on the floor of the New York Stock Exchange with Jason Su. He's founder of Rayliant Global Advisors. Jason, thank you for joining.
Doug, thank you for having me.
I want to talk a little bit about what's happening overseas. The Nikkei index, right? It's hitting new highs. There's a lot going on in that region. What are some of the factors that are driving that performance?
So I think there are three key factors driving the Japanese equity market rally. First of all, the yen has depreciated by 30+%. So everything in Japan is really cheap. Both tourism, manufacturing, export has all picked up. Second of all, the US friendshoring, right? There's a lot of manufacturing moving away from China and now looking for new homes. And Japan has been the preferred destination. Just think about it. 5% of export moving from China to Japan means a 25% increase in Japanese export. So that's, again, been a positive catalyst. And finally, look, Japan's been in deflation for the last 30 years. Prices finally properly adjusted. So again, I think they're finally sort of done with this deflation adjustment and ready to welcome a new cycle in economic growth.
So let's stick with that. How do you approach investing when you think about the Japanese market?
So I think you want to be very active, because if you look at Nikkei, the key components are still some of these big, gigantic banks, the large conglomerates. I don't think they're going to be the stocks that will deliver the return in this new recovery. So I think you want to look actively into the lesser known names, probably into the mid cap, where there are a lot of opportunities, a lot of category leaders that you've never heard of. That's where I would go.
So you've recently launched your brand new ETF, ticker symbol RAYJ, easy to remember, Rayliant Japan. It's an actively managed ETF focused, of course, on the Japanese equity market. And you've done this in collaboration, which is really interesting. You've worked with Sumitomo. Help us understand that collaboration. Why was that important?
So absolutely. First of all, we did launch a Japanese ETF, thus this t-shirt, right? Robotech, the very first Japanese anime that made it big in the US. Now the collaboration with Sumitomo Mitsui is because we wanted to combine our quantitative process with a fundamental process. So we want to lean on one of the sort of longest track record, biggest asset manager in Japan to do the stock selection based off of our quantitative scoring of Japanese equities. So it's really the combination of the quantitative science that we bring and the deep stock research company visits that a Sumitomo Mitsui can bring to the process and give you best of both worlds.
So let's dig a little bit into RAYJ here. Tell us a little bit about the investment approach when it comes to the ETF.
So what we're looking for is, of course, identify companies that are going to benefit in kind of this next structural growth phase for Japan. And so we're looking for quality growth. And again, most people don't think of Japan as quality growth. Like the last 30 years, it's mostly been value play, maybe clip some coupon from buying dividend paying stock. But we really do think this is a time to invest in growth. And so we're really focused on quality growth within our portfolio selection and really kind of bring in the fundamental piece that Sumitomo Mitsui can bring to the process to sort of enhance that edge.
So let's talk to the investors, advisors that are listening in. What are you telling them about investing in Japan right now?
So I would say, this time is really different. The cheap yen is a great catalyst. The US friendshoring, driving manufacturing to Japan again, is an amazing catalyst. So I would say, investor, not only should this be part of your strategic asset allocation, probably from a tactical perspective, it's a good overweight in your international portfolio. So absolutely something to look into.
So for someone who's maybe not as familiar with Rayliant, this is not your first ETF. This is not your first rodeo. You've got 4 ETFs listed here at the New York Stock Exchange. Where do they go to learn more?
Right. To find out more about our ETFs, go to funds.rayliant.com. But also do connect with me on social media. I'm on LinkedIn, very active, and my research and my asset allocation views are on LinkedIn. So come find me on LinkedIn as well.
He is a social media monster. He's also often on CNBC. It might be why he looks so familiar. Now, as a reminder, if you caught this episode live, but you're looking for thought leadership content, you want to become a certified ETF advisor, a CETF, you can do it all at our website, etfcentral.com, brought to you by none other than the New York Stock Exchange, the home of ETFs.